What's up, everyone? I'm back again with another stock today. So, the stock I am looking at today is ABEV or Amber SA. So, this stock is, before I go into that, like and subscribe to my video. And
I thought the important thing was to predict what a stock would do and predict the stock market. And then I read Ben Graham, when I was 19 or 20. And I realized that I was doing it exactly the wrong way. But it didn't hurt that I had that background and everything. I rejiggered my mind and when I read the book, The Intelligent Investor. And from that point, I never bought another stock. I bought businesses that happened to be publicly traded.
what this stock is. Well, first of all, I need to tell you my requirement for my stock. Number one, it has to pay a dividend.
Never buy a stock that doesn't pay a dividend. That has been your advice through and through. Why are these stocks more attractive?
You look at companies that don't pay distributions, don't return capital, how risky they are. Take a GoPro, for example. I'm not just picking one company. I'm just giving you a good example of a company that basically has lost 70% of its value, never returned a dime to shareholders. Or how about a company that's been around much longer, Yahoo? Never paid a dividend. It's never made money for anybody except all the CEOs that have gone through there and got whacked. It's just a rotating door where management extracts capital, never returns any to shareholders. And I think, look
Add to my portfolio. Number two, it has to have good financial standing. And number three, it has to have good growth opportunity. Since it's going into my bridge account, I'm not really worried about it. And so I get passive income before I retire.
Retirement accounts have age restrictions, so in most cases, you gotta wait till 59 and a half to tap into those 401ks and IRAs without penalties. So here's a bonus pro tip for you. If you want to retire before then, let's say at age 50, or at least have the ability to do that, you can utilize a normal savings account or a bridge account, which essentially is a non-retirement investment account that you can use to float you until you're old enough to tap into the retirement account.
So let's get into this stock and what it is. But before you understand, if you don't know what passive income is, here's a video about it.
Is because you're buying stupid courses over and over, thinking there's some magic formula for passive income. Passive income looks like this. You take money that you can afford to go to zero, and you put them in the two places that have historically created passive income. Public markets, that you don't care if it goes up and down and you just wait to the end, or real estate, and you hope that your real estate area doesn't get crushed.
Let's get into this stock. So this stock, AMBEV, is a distributor and they work with beer. And it looks like they're based off Brazil and it's considered a penny stock. I try to find a little bit more information, but it's in Spanish. So I will put on the screen the history of it. So let's go into AMBEV and see how they've been doing. If you didn't know, I found this stock by Googling dividend stocks. And here's to see if it was even worth buying. I'm doing my investigation, see if it's even worth trying to even look at it. So 1 month it's down 12.45%. 3 months it's down 12.45%. And year to date it's up 17.84. 1 year up is 5.31. 3 years is down -21. And 5 years is down 18.61. Yeah, it doesn't look like it has very good growth, but let's look at the dividend. So the dividend pays out is 5.02% with the annual dividend of 11 cents. And it dividend payout ratio is 68.75%. So it does pay dividend, pays decently high. And with the 5% growth with 1 year, that's about 10% growth in 1 year, and that's not bad. But before we do all that, let's look at the finance and see how it's doing. Financially, it looks like it's doing pretty good because 89.45 billion from the previous year is 79.74%. So it grew $10 billion. And 2022 and 2021, it did not, well, it did grow about 6 billion, but from 2022 to 2023 it didn't look like it grew, and that might be because what happened with the beer. But let's look at the gross margin. The gross margin is 51.24%. That's really good. And if you don't know what gross margin is, it's just the revenue minus cost of goods sold. And net profit is 16.60%. That's pretty good. It looks like it's been pretty stable with the profit margin and the net profit. But before that, let's look at the balance sheet and see if they're borrowing more money to offset some of this. So what I really like to do is use the current asset and fixed asset, add them up, and it's 150 or 62 billion, and subtract the long-term debt and current liability, which 324 million is long-term debt, which it looks like it's been decreasing. That's pretty good. And current liability is 49, and it's been on the increase on the liability side, but their current asset is more than their liabilities, so they're worth about $108 billion. Let's see what their cash flow looks like. This is what you can really see if they're doing good or bad. So currently in 2022, let's see, it's 20 billion. It went to 24 billion, 26 billion. So it did increase the operation cash flow. And let's see free cash flow. How much more money did it get every year? Let's see, 15.22 billion dropped to 14.11, increased to 18.718 or 1 billion, and to 21.35 billion. So it looks like they've been having more cash flow. So they're having more cash. So financially, they look pretty good. Now, let's go into investors. Let's see who's investing in this company. First, Eagle Global. So top mutual fund holder. So a lot of mutual fund holds this. Fidelity. So it looks like Fidelity holds this. It's probably for their high dividend. Let's see. And let's see. Let's go into the AI and see what AI says about it. So the top stories for it. Corporation, government practice, July. Coca-Cola closed cylinder warehouse after 70 years. Earning reports. Jim Cost returned as CEO. Guinness sales focus on market. Okay. So evaluation compared to everyone else, it's 5 out of 6 or 6 out of 6, which I agree. It's undervalued. It's only worth $2.18. So the valuation is pretty good. The earnings compared to everyone else, it's pretty good. I agree with it. Everyone else's earning is pretty bad. I don't think that it should be 3 out of 6, but AI says 3 out of 6. I think it's a 6 out of 6. Future growth is 3 out of 6. Well, I don't agree with the future growth, but let's keep going. The reason why is because I don't think beer sales been doing very well. Now maybe their seltzers and all that stuff is doing pretty good, but at the end of the day, there's not as many beer drinkers. There's been a decline in the last few years. Unless we see an increase, I don't think it's going to be doing so well. So historical performance is 4 out of 6. I don't agree with historical performance because if you look at this, the max is negative 71. It looks like it's on the decline. The 5 years, it looks like it's on a decline. In 3 years, I actually think the growth based off the chart is going to be a 1 out of 6. Or does it have good potential? Yes, the earnings, if you base off the earnings, it should be going up. But some reason it's going down. But at the end of the day, I don't know why. And maybe because people are trying to predict what it does. So, historical performance compared to everyone else, it's 4 out of 6. I agree with that one. And financial health for current ratio to peer to industry, I actually think it's a pretty good if you don't compare it. I think it's a 5 out of 6, not a 1 out of 6. But at the end of the day, what do I think about this stock? I think this stock, personally, I am not going to add it to my portfolio. It does pay a good dividend, but based off the historical performance, I cannot buy it because it looks like it's dropping. Now, maybe when it start increasing and going on valuation, I'll purchase it. But right now, it looks like it's on a decline for the 3-year and 5-year. And maybe it's about time it's turning around and it's going to do better. But I don't really see it doing it. But the finances is really good. If you look at it, their cash position is increasing, and that's what I like to see. So financially, they're doing good, and their dividend payout's really good. It's just the historical growth of the company is not that great, and that's why I'm not buying them. Now, if the historical starts changing, and I see it start changing, yes, I will buy them. But right now, they still could be going on a decline for next year or two. And since they're already a penny stock, it just makes no sense to buy them. You know, it can get cheaper. And two, at the end of the day, historically, when I looked at the data for beer drinkers, seltzer drinkers, it is declining for almost all these countries. And it's not going to hold as much value. Will they go away? No. But will the valuation go down? It will be due to less drinkers? Yes. So until we start seeing increase of drinkers and increase of soda drinkers for Pepsi products, I don't think it's going to be doing so good until that point. So right now, the future growth is the issue I have. And due to what the world looks like it's doing with beer drinking, it's just not going to do well. It's still going to make money. It's going to be around for a while. But on the chart, it might not increase. And I'm looking for growth and not for a company to hopes and dreams that it will do better. At the end of the day, this company's not going to close, but it's not going to be making the profit for that I would like to see it to grow on historical. So I don't think my growth is going to be that good. With the dividend, I think it probably be about 5 to 7%. So if you're looking for a nice stable dividend payout, this is a good company. But if you're looking for a good growth company, this is not it. So like and subscribe to my video, and that's all I got for you.